Bring Latha Venkatesh in as well. Latha, we heard the government's take on the numbers clearly. What, according to you, are the key takeaways that we need to keep in mind with respect to the macro numbers?
Well, the first key takeaway on the GDP numbers is that it has come in at 7.6% for the full year, as the advance estimates indicated, compared to 7.2% last year. So growth is there. 40 basis points growth for sure. When you only look at the fourth quarter numbers, then the GDP number has come in at a solid 7.9% against expectations of 7.6. So that's also a very good achievement, whether you look at fourth quarter or whether you look at full year. Full year in line, very good. Fourth quarter, even better than what the market expected. So excellent numbers on the GDP growth itself. If you looked at the internals, then there are perhaps one or two disconcerting factors. What is positive is that for the fourth quarter, private consumption has grown by 8.3%. That's very good. What's not good is that capital formation in the fourth quarter has only come in at a contraction of 1.9%, minus 1.9%. That's bad. Even for the full year FY16, capital formation has only grown by 3.9%. That's not a very good number. However, consumption is fairly healthy at 7.4% for the full year. So the key takeaways: consumption good, investment still needs to pick up, especially in the fourth quarter. A fourth takeaway is that on the taxation front, we have done very well. The taxation is can be derived by the difference between the GDP and the GVA number. GVA number for the fourth quarter is 7.4, but GDP is at 7.9, which means taxes, that is the difference between the two. Taxes have done very well in the fourth quarter. In fact, we also have the revenue deficit numbers, and we know that the revenue deficit for FY16 is much lower at 2.5% compared to 2.9% in the previous year. So that's the positive. The fisc has done very well. The only negative in the whole thing is capital formation in the fourth quarter not doing too well. One hopes investment will catch up in FY17.